Hello, Deltas. How are you this afternoon? Have you heard lots of exciting stuff today, I assume, right? Lots of it, I'm sure. And now, together with an amazing panel that I have for you this afternoon, we are going to look into how to become a successful project and to raise the necessary investment. And for this, I'm going to invite on the stage 4 amazing entrepreneurs, serial entrepreneurs and investors to share with you from their insights. So I'm going to invite first Nikolay Shkilev, the CEO and co-founder of the Private Business Club. Hello, Nikolay. Tugce, Ergul, co-founder Angel Labs. Monserrat, founder and CEO of Consilience Ventures. Welcome. And last but not least, Lenikus, co-founder and CEO of BlockExpo. Hello, Daniel. Please have a seat. I will join you. And we are going to have a nice round of questions. But before questions, I would like to invite you all to just tweet a short introduction of yourself, something that goes beyond what is already on the screen there.
Okay.
Nikolay?
Okay. Hello, everyone. Firstly, I'm a businessman with over 20 years of experience of owning different types of businesses. In parallel, I work as a mentor advisor to help tens of projects worldwide. And my private business club offers investment ideas beyond the classical wealth management.
Thank you.
Good afternoon, everyone. My name is Tugce Ergul. I'm one of the founding partners of Angel Labs, a San Francisco-based venture capital firm. We're an umbrella entity, so we do have a traditional VC fund where we make most of our investments in the Valley or in the US in general. And then we have an advisory firm where we work with different corporations, governments, and act as a venture capital as a service firm.
Thank you. Good afternoon, everyone. Monserrat. My background is economics and finance. I stepped into the hedge fund world coming in London and then got hired by Microsoft Ventures to lead the startup ecosystem, essentially managing a portfolio of 150 VCs worldwide, incubators and accelerators. And then I now founded Consilience Ventures, which is a venture capital platform to decentralized capital access and decentralized knowledge.
Daniel?
Hey guys, my name is Lenikus. I'm an entrepreneur from Vienna and co-founder of BlockExpo. We host weekly meetups in Vienna to support the local blockchain and startup community. We organize summits and conferences, and we also support certain startups and companies with our network in terms of blockchain and crypto.
Thank you. So we actually have quite a bit of even 2-in-1 here, you know, entrepreneurs and turned investors afterwards. So we can look at things from different perspectives. Let's start with you, Nikolay. I mean, we have quite a topic that we can break actually in building blocks.
Okay.
What do you think, first and foremost, does it mean to be a successful project?
Okay. For me and all of the investors, it's project with highest ROI, return of investments. Everything else, it's non-primary. You may have a very beautiful project, very good idea, very good product, but if you did not return the contributed investments, this project is unsuccessful. It's simple.
So it's the key thing for you?
Yeah.
Okay. But when we look at the road towards success, like, for example, from an entrepreneur perspective, Daniel, what do you think would be the critical factors to move towards success?
Like, most important for me is if someone is willing to found a startup, you have to go into yourself and ask yourself, are you ready? Because then there's just one person to blame, it's you. You're not working for someone, you are your own boss. I mean, that's also beautiful, but it can also be scary. So first of all, are you ready? Then 100% dedication and also, you know, fascination about your own project. If you're not, you know, willing to give 110%, work 10 hours a day, it won't work in the end. So
you won't get there.
No, 100% dedication. Everything else not so important.
Thank you. And you know, as we move towards the success, ultimately there are certain signs that we reach those milestones. As an investor, Tugce, are there certain signs of traction that you are looking towards and eyeing in terms of seeing if they move in that direction?
Yes, so our fund invests at both seed stage and at Series A. So definitely the things we're looking at the seed stage are very different from what we look at Series A. When we're evaluating seed stage investments, we look at the team and the product and the market, and then what kind of an MVP the startup and the team has come up with. And when you're evaluating Series A investments, then you're looking at how the market has been reacting to that.
Okay.
And if that resonates with users outside of your friends and family that supported you in the beginning. So those are the initial traction criteria we'll look at.
So building on that, if you see that, for example, a specific project is supported through crowdfunding or any other type of support, maybe public or other sources, is that a sign of support beyond friends and family?
It's definitely a good signal. It's definitely a good sign. It also, so crowdfunding and venture capital can be extremely complementary, but a startup can also choose to move forward with just one versus the other, depending on their needs. I think crowdfunding is amazing if you're raising a smaller chunk and if you don't mind having smaller investors on your cap table versus having one large check from a large investor. So I guess it becomes a little harder at later stages, but at the earlier stage, it's definitely a positive signal.
It shows validation, at least, market validation.
Yeah, for sure.
Okay. And you know, it's like we definitely talk here about how to become successful and receive the necessary investments, but is there some sort of order here? Is there a prerequisite one for another, raising investment or being successful, or being successful and then raising investment?
So the major problem that our industry is facing is that investors are looking for higher returns, and entrepreneurs are looking to get the money of the investors, and it is certainly a massive distraction for most entrepreneurs. So there's lots of PR around how much those companies are raising. We totally think that actually raising money, it's a pure distraction. You do not want to raise money. You're not in the business to raise money. You're in a business to validate your market size, to validate your value proposition, and to actually turn your company into a profitable business. When you raise money, you are losing equity, you are diluting yourself, you are diluting your founders, and you are diluting your shareholders. So if you are in the business of just raising money, you are in a wrong game. So we have developed, Consilience has developed a capital as a service method, so that we technically help entrepreneurs to 100% focus their attention in growing their business. They do not care about raising money anymore, and they do not care about trying to find the best people to work with, because we can bring those two parts together so that the startup can be on the motorway and hit the targets, which is success by all means, profitable customers, and high growth.
So just focusing on success.
Exactly.
From your perspective as an entrepreneur, because you know, it's like we can look at things from different angles. What do you think? Is raising investment, for example, instrumental in achieving success? Or not?
I would say it's always easy to make money if you have money. So if you raise money, yeah, it helps. But as I already said, like he also said, you have to focus on success, because if there are two companies that raise the same amount of money and do the same thing, and one can focus really on the important things like product, sales, business development, and the other one is more focused on like raising more money or whatever, the one that can really focus on business will succeed even if they have the same amount of money. So I think, yeah, you will, at some stage you will need money, but it's not, yeah, it's critical for success, but there are different parts of success.
Okay.
I would say that's my take on it.
That's good. Nikolay, you work across the world, but you are also very much, embedded and rooted in a large market in Russia. I'm not sure. Maybe you can, give us some insights. Are there certain differences in terms of the key requirements for a project to move towards raising financing in Russia compared to Europe or beyond, or not?
No, the same. And so it's a very good question. Do you remember how 2-3 years ago it was enough to have only one idea and everyone invested in it? 1 year ago it was enough to show MVP, minimal viable product. But now, if you want to get an investments in Russia or Europe or everywhere, you must have a clear business model, big community, it's very important, big marketing budget, strong team is a must, of course, as well as the product, not just the MVP.
Just the MVP.
Everything has become like the real sector of economics. Therefore, we have made a very powerful project that meets all these criteria and has an understandable business model. Actually, this problem exists in 99% of projects, lack of a clear business model. It's a big problem in crypto world, not only in crypto. You must have. For example, we have this business model, and that's why we already have a queue of private investors, and our project is fully financed.
Yeah.
Remember, clear business model, big community, marketing budget, strong team, and finished product.
And the requirements are increasing over time, actually.
Yeah. And the same in Russia, in Europe,
everywhere.
in USA, the same.
Okay. What about additional rounds of finance? Like, because 1 year later, 2 years later, the companies go back to investors. Are there additional requirements being, put forward to raise that extra investment?
Yeah, for sure. As I mentioned earlier, you're looking at, and he said something very important, the community is very important. So you want to see some sort of a following, you want to see a community growing around the company. At that point, you stop being a startup and you start scaling. So of course the criteria changes. But there are also different metrics we'll look at for bridge rounds. So sometimes you're not Series A ready necessarily, but you need something to get you going with your operational costs until you become Series A ready. So yes, that criteria constantly changes. But we just want to see the company growing. And not just looking at, we just don't look at like KPIs and isolate them, because sometimes startups can get too obsessed with a specific metric, a specific KPI. We don't look at things, we don't isolate those metrics. We just want to see the bigger picture and see how they're going.
Are evolving.
Yes.
And interesting about that bridging. And this gets me to a question, as investors, are you actively looking, for example, at other complementary sources of financing beyond your investment or beyond equity financing? For example, at least in Europe, there is quite a significant support being provided through EU funds or national funds, sometimes, for innovation. Is this something that you are looking towards? Maybe Kevin?
So basically going after public funding, it's extremely risky because there is very, very, very small chance of getting it. And then it is extremely time consuming. So raising money, public money, it's a great thing if you can, but the reality is that there is a whole business around it because it's extremely painful. So it is obviously critical to have equity-free money, no doubt. Startups should think about this. But in reality, it is not suited for lots of businesses, right?
Yeah.
We invest in deep technology, in deep tech. And of course, there is plenty of money going into deep tech. But actually applying for public funding, it's an art. It is extremely complex, and the problem is most of the people on the other hand of the spectrum looking at those deals are actually not as well as educated as they should, which is a massive problem because on one hand you have the innovators, and on the other ones you have the gatekeepers, and you've got to find the balance between the innovators and the gatekeepers. So what we are building essentially is this platform which can bring the public money and the private money together to increase the returns and the velocity of the money, basically.
I think, I mean, just a bit earlier, I was speaking also with Tugce, and it's interesting how, you know, because things change and certain perceptions remain, and maybe it's important for the investors to also see that, for example, at a European level, and I know this because I'm involved quite a lot in it, there are a number of programs that are starting to look at blending finance, actually, public money with investor money. And on top of it, there are a lot of business angels, investors, mixed teams within the evaluation pools. So actually, there are very relevant people also on the other side of the table. It is a complex process, but I think it's less time-consuming than the gossip out there or the reputation out there is. So probably it might be worthwhile for investors to look more into it. At least it's
I think investors do look into them, but for themselves, because now we're talking about EU grants for startups, but I honestly, personally know more about them because there are a lot of matching grants that are provided by the EU for VC funds.
Of course, even for, yes. But there are the others also. Anyway, it's something that is worth exploring. Daniel, talking also about complementary and complementarity in terms of efforts. As an entrepreneur, how else do you think that investors can support a company on its road to success beyond the injection of finance?
Network, or network, know-how. And I would also say it's very important that they give the startup, like maybe again, network, know-how, and freedom to operate, like some sort of freedom, because there are some investors that then constantly want to be involved in every decision making, want to see what exactly everyone is doing. So I think it's very important. I mean, if you invest, you should also trust, and therefore give the people in the startup some sort of freedom so they can still operate, because I mean, it was still their idea, they founded it, so if then there's someone in their neck always like looking over the shoulder, I think that, you know, doesn't do good.
Yeah, so get involved and make contacts and facilitate contacts, but not too much.
Yeah, I mean,
find a balance.
The startup will come.
The value that comes with it.
Yeah, I mean, and the startup will, they trust the investor. If they need help, they come to the investor and they ask for it. But sometimes it's just good to let them work. And of course, if you see it's going in the complete wrong direction, you say something. But sometimes show that you trust them, and I think that's healthy for the whole partnership.
How much do you get involved in steering the ventures?
So I think the problem is that actually the construct around startup and investor relationship has gone completely wrong lately. Certainly in Europe, because the market of investors is not as educated as it is in the US. And therefore, what you see in Europe is that there's lots of fund managers who have no experience running businesses, and therefore they tend to actually look at
micromanage.
They look at micromanaging, but they don't have the actual ability to run businesses, and they don't have the experience. In the UK, only 4% of the GPs have actually worked in the technology business before. Yeah. So I guess my point is, so long as there is lots of value that comes with the support, it is obviously pointless. So how we get involved, we have an extremely pedantic due diligence process before investing into the companies, because once we have this company in our portfolio, we are going to do everything to back them up. And therefore, yes, we believe that innovation is a process, and we believe that innovation on its own has to be steered. Yeah. It can't just be led to the randomness. It has to be steered, and we're building the framework. We're bringing the experts, and we're bringing the investors to also allow the startups to do more innovation as well, which is what startups are not thinking about when they're looking for investors, unfortunately. Because if you think at Google, Google has always been investing 70% of their cash into the daily business, 20% in innovation, and 10% pure bets.
Yeah.
Pure innovation, pure innovative stuff, because that's how you think about how the market is going to evolve
works.
in the next 5.
Thank you.
So,
Our very last question, Nikolay, long term and on the path post-investment, maybe the second round of investment, are other critical success characteristics that you are following up, or are the same ones that you monitor?
It's simple. ROI again, growth and popularity rates, compliance with the original financial plan and business model, and current situation. It's simple and check everything.
You continuously follow up with the market ultimately. Thank you, all of you, and to the audience.
Thank you.
This is the end for our panel now. Thank
Okay,
you.
Thank you.